A 73-year-old retired man walked into the same bank he'd used for 30 years. He'd known the tellers by name since the 90s. He asked to withdraw $5,000 of his own money, and he walked back out with his entire account frozen. For 19 days, he couldn't pay his electric bill. He couldn't fill his prescription. He couldn't buy groceries. His Social Security kept landing in that account like clockwork, and he couldn't touch a single dollar of it. And here's the part I want to stop you on. He did nothing wrong. There was no scam. There was no fraud. There was no mistake on his end. The bank froze him on purpose. And under a rule that quietly took effect this year, they were completely allowed to. I need you to hear this next sentence very carefully, because it is the entire reason I made this video. If you are over the age of 65, this can now happen to you. And almost no one has bothered to tell you. In 2026, your bank has been handed the legal power to freeze your money, hold your withdrawals, and lock you out of your own account for up to 15 business days. Business days. That means weekends and holidays don't count. 15 business days on the calendar stretches to 3 full weeks. 3 weeks without access to your own savings. Not because you did anything wrong, simply because you crossed an age line you didn't even know existed. I spent weeks going through the new state laws, the federal guidance, and the actual bank policies. And I found 6 specific things that can set one of these freezes off. Some of them you probably do every single week without thinking twice. One of them traps people who are only trying to move their own money between their own accounts. Another one is a federal crime that honest, careful seniors commit by accident because they were trying to be smart about their withdrawal. But here's the good news, and it is the reason you need to stay with me all the way to the end. There is one thing, one free phone call. It takes about 5 minutes, and it makes you almost impossible to freeze. Almost no senior I've ever met has heard of it. I'm going to hand it to you today. But the order matters, so please don't skip ahead, because the 6 triggers are what teach you why the fix works. My name is Walter Barron. I'm a state bar licensed estate attorney, and for more than 15 years, I've sat across the table from families dealing with frozen accounts, blocked transfers, and money they couldn't reach when they needed it the most. So when I tell you these rules are real, I'm not reading you a headline. I've watched up close what happens to a good, honest person when they suddenly can't get to their own savings. And I'm telling you plainly, this is the year it started happening to ordinary seniors who did absolutely nothing wrong. So how did we get here? Who decided a bank could do this to a person in their 70s? Let me show you exactly what changed, because the story behind it is not what you'd expect. For most of the last 40 years, when a bank suspected an older customer was being scammed, the bank's hands were mostly tied. They could pull you aside, they could warn you, they could even beg you not to send the money, but they couldn't stop the transfer. And if they tried to delay it and they turned out to be wrong, you could sue them. So the money moved. Even when the teller had a bad feeling in her stomach, the money moved. The problem was that fraud against seniors didn't just grow, it exploded. We're talking billions of dollars a year being drained out of the accounts of Americans over 65. Romance scams, fake IRS calls, the grandson in jail call at 2 in the morning. And so lawmakers, well-meaning ones, decided the banks needed more power to step in and slow things down. That's how we got what are now called safe harbor laws. And as of this year, more than half of all states in this country have one on the books. Federal guidance points the same direction. So this isn't a rumor. This isn't one bad state. This is the new normal. Here's what a safe harbor law does in plain English. It says that if a bank reasonably believes that an older customer is being financially exploited, the bank is allowed to freeze the transaction, hold the money, and delay your access to it. And you cannot hold them legally responsible for that delay. They are protected, shielded. The law gives them cover. Now here's the part I need you to hear. The word these laws use is specified adult. And a specified adult, under almost every version of this law, means anyone who is 65 years of age or older. That's the line. That's you. The day you turned 65, you quietly moved into a special legal category that the rest of the country is not in. Nobody sent you a letter. Nobody explained it. But the moment that birthday passed, your bank started treating you differently than they treat a 45-year-old customer sitting in the same branch. And the hold isn't a day or two. The window written into most of these new rules is 14 to 15 business days. Add in weekends and a holiday or two, and you're looking at 3 full weeks on the calendar. 3 weeks where your Social Security keeps landing in an account you cannot touch, while your bills keep arriving on their normal schedule. Now, I want to be fair with you, because I'm not here to make banks the villain. The intention behind these laws is genuinely good. They were written to stop a grandmother from wiring her life savings to a stranger she met online. That is a real, terrible problem, and I've sat with the families it's happened to. Nobody who's seen it up close is against protecting seniors from scammers. But here is the trouble, and it is the whole reason this video exists. The bank does not know the difference between a scam and your normal life. They built computer systems to guess, and those systems, run by machines that have never met you, get it wrong constantly. Which means the very rules written to protect you can freeze you. And the 6 things that set them off are things you probably do without a second thought. Trigger number 1 is the sudden large withdrawal. And this is the one that catches the most honest people, because the thing setting it off is the thing you saved the money for in the first place. If you've had a quiet, predictable account for years, Social Security in, utilities out, groceries on the debit card, and one day you walk in and ask for $10,000, $15,000, $20,000, the system notices. It doesn't matter that it's for a new roof. It doesn't matter that it's to help a grandchild with a down payment. It doesn't matter that it's your money that you saved for exactly this reason. The size of the request, compared to the pattern of your account, is enough by itself to put a flag on your file. Here's what to do about it, and it is the simplest move in this entire video. Never surprise your bank with a big withdrawal. Walk into the branch 3 or 4 days early. Sit down with someone at a desk. Say it out loud, in person, on the record. Tell them, on Friday, I'm going to withdraw $15,000 for a new roof. Here's the contractor's name. That one conversation does 2 things. It gives them time to have the cash ready, and more importantly, it puts a clear, innocent reason on your file before the computer can invent a suspicious one. Announced money does not look like stolen money. Surprise money does. Now, trigger number 2 is the one that catches truly innocent people, and I want you to listen closely, because some of the things that flag your account are going to shock you. Banks now use artificial intelligence, not the science fiction kind, the kind that quietly watches. These systems learn what they call your financial heartbeat, the rhythm of how you normally bank, what time you log in, what device you use, how fast you type your password, where your money usually goes. And the moment something breaks that rhythm, the system leans in. Here is what actually counts as a red flag. Logging in from a new phone or a new tablet, the kind your kids might give you for your birthday. Starting to use Zelle or Venmo when you never had before. A change in how you type, even a tremor in your hand that slows you down at the keyboard. Sending money to a person you've never sent money to. Any one of those things, by itself, can put a hold on your account. None of that means you're being scammed. All of it can freeze you anyway. Because the computer is not evaluating you, it's evaluating the pattern. Here's what to do. When something in your life genuinely changes, tell your bank before the computer notices. Getting a new phone? Call them. Starting to send money to a new grandchild? Call them. Trying out a payment app for the first time? 2-minute call. Say the words, "This is me, this is new, this is normal." You are writing your own explanation on your file before the machine writes a worse one. Those first 2 are the common ones. The next one is not common. The next one has actually sent innocent seniors to federal court, and most of them had no idea they were doing anything wrong. Trigger number 3. I need you to slow down and really hear this one, because good, honest, careful people have lost their entire savings over it. Some have gone to federal court, and every single one of them thought they were being smart. Here's how it happens. Somebody, a neighbor, a brother-in-law, an article they read, tells them that any bank withdrawal of $10,000 or more automatically triggers a federal report. And they think, well, I don't want the government looking at me. I've got nothing to hide, but I don't want the hassle. So I'll just take out $9,000 this week and $9,000 next week and stay under the line. Do not ever do that. I'm going to say it one more time so it lands. Do not ever break up your withdrawals to stay under the $10,000 reporting limit. That act, that specific act of splitting up the money to avoid the report, is itself a federal crime. It has a name. It's called structuring. And here's the part that stops people cold when I explain it. It does not matter that the money is 100% yours. It does not matter that you earned every dollar of it honestly over 50 years of work. It does not matter that there is no underlying crime. The act of breaking it up is the crime, all by itself. People have had their entire accounts seized over this. Money that was completely honest. retirement savings, pension money, simply because the pattern of the withdrawals looked like someone trying to hide something. The government does not have to prove you were hiding anything. They only have to prove you structured the withdrawals. I've watched this happen to a small business owner in his late 60s who was closing down his shop and moving his cash into savings a little at a time because he thought it looked more responsible. It didn't look responsible to the algorithm. It looked like structuring. And he spent the next 18 months and thousands of dollars in legal fees proving he was an honest man. So here is what to do. Do the exact opposite of hiding. If you need to take out a large amount of money, $12,000, $20,000, $50,000, take it in one clean transaction. Let the report be filed. That report is called a currency transaction report, and I need you to understand something about it. It is harmless when your money is honest. It is a routine form. It goes to a federal office. It sits in a database. Nothing happens. Nobody knocks on your door. Nobody freezes anything. Millions of these reports are filed every single year, and the honest ones are ignored. The danger was never the report. The danger is looking like you were trying to avoid it. So take the withdrawal in one honest transaction, tell the bank what it's for, and walk out with your money and your record clean. That one right there can cost you your freedom if you get it wrong. The next one is quieter. It won't send you to court. It just quietly hands your money to the state while you're not looking. Trigger number 4 is the dormant account sweep. And this one quietly moves seniors' money out of their own bank and into the state's hands every single year. Most people don't even know it's legal. Here's how it works. If you have an account you rarely touch, an old savings account you set up decades ago, a certificate of deposit you rolled over and forgot about, a small fund you set aside for a grandchild, and there is no activity on it for a stretch of time, often around 3 years, the bank can legally declare that account abandoned. The technical word is dormant. And when they declare it dormant, they hand your money over to the state as what's called unclaimed property. Your money, sitting in a state office, waiting for you to walk in and prove it's yours. Most people never do, because most people never find out it happened. Here's what to do, and it is almost embarrassingly simple. Touch every single account at least once a year. Log in. Move $1 from checking to savings and back. Make one small transaction. Anything that puts a heartbeat on that account and proves it's alive. 1 minute, once a year, per account. That keeps your money in your bank instead of in the state's unclaimed property file. Trigger number 5 is the one I see do the most damage in real life, the investigation freeze. When any of these systems we've talked about flags your account, the bank can freeze it while they investigate. And while that freeze is on, you may not be able to withdraw. You may not be able to transfer. In some cases, you may not even be able to see your balance clearly online. Your direct deposits keep landing. You just can't get them out. And here's the part that makes it worse. The person you get on the phone, the teller at your branch, the customer service voice on the 800 number, often cannot lift the freeze because the freeze was placed by a completely separate department, a fraud unit, a compliance office, somewhere upstairs. And you, the customer, are not allowed to call them directly. You have to wait while they investigate a stranger, you, and decide whether to give you your money back. Trigger number 6 catches people who are only trying to move their own money between their own accounts. If you try to wire money to another state, if you're moving it to an online-only bank because the rate is better, if you're sending it to a brokerage account, or worst of all, if you're sending it to a newer account you just opened somewhere, the system treats distance and newness as danger. Think about how this looks to a computer. A transfer to a bank it doesn't recognize, in a state where you don't live, going to an account that is only a few weeks old. Those 3 things together look exactly like what a scammer does with a victim's money. So it gets rejected, or held, or flagged, even though it's just you moving your own savings to your own account. Here's what to do. When you open a new account somewhere else, or you're planning to move money to a different institution, do it in stages and tell both banks first. Move a small amount to start, let it clear. Call ahead so both ends of the transfer are expecting it. A planned, announced, gradual move sails right through. A large, sudden, first-time transfer to an unfamiliar place is the one that gets stopped. So that's how they lock you out. 6 triggers, 6 ways an honest senior can end up frozen out of their own money for 3 weeks. Now let me give you the one thing that makes almost all of it impossible. I've been telling you since the very first minute of this video that there is one free phone call that makes you almost impossible to freeze. Here it is. It's called a trusted contact. Almost every bank, credit union, and brokerage in the country now lets you name a trusted contact on your account. It costs nothing. It takes about 5 minutes. And I'll tell you honestly, in my 15 years of doing this work, I've watched more seniors get burned by not having one than by any other single mistake. A trusted contact is one person, a son, a daughter, a close friend, a niece, someone you trust completely. You give the bank their name and their phone number in advance, and you sign a short form authorizing the bank to reach out to that person if they ever have a concern about your account. That is it. That's the whole thing. Now here is why it changes everything. When the bank system flags your account and they're standing there about to freeze it for 15 business days because they think you might be getting scammed, the trusted contact gives them someone to call before they slam the door shut. Instead of freezing you and investigating a stranger for 3 weeks, they pick up the phone. They call your daughter. And your daughter says, "Yes, my mom is buying a car this week. That's completely normal for her. She told me all about it." And the freeze never happens. You have preloaded the answer to the question before they ever ask it. You've turned a 3-week nightmare into a 2-minute phone call between the bank and someone who knows you. Now I need to clear up the biggest fear people have about this because it stops a lot of seniors from doing it, and it shouldn't. A trusted contact cannot move your money. They cannot withdraw a single dollar. They cannot see your balance. They cannot make any decisions about your account. They cannot change your address. They cannot close anything. All they can do, the only thing they are allowed to do, is answer the phone and vouch that you are a real person, living your real life, making a real decision. That is it. It is the cheapest, simplest, most powerful piece of insurance in all of personal finance, and you can set it up this afternoon. Here's exactly how. Call your bank. Ask for the branch manager if you can. Tell them in these words, "I want to add a trusted contact to my account." They will know exactly what you mean. They will send you a short form or bring one to you at a desk, and you fill in one name, one phone number, and your signature. That's the whole process. Do the same thing at your brokerage if you have one. Do it at your credit union. Every institution that holds your money should have a trusted contact on file. Now, if you do only one thing after watching this video today, one thing, please, let it be this. Because Raymond, the man I told you about at the very start of this video, the retiree who was locked out of his own money for 19 days, he didn't have a trusted contact on file. And that one missing piece of paper is the entire reason his nightmare lasted as long as it did. But one call isn't enough. Real protection is layered, and the rest of the layers are almost as easy. The trusted contact is layer 1. It's the biggest one. But the seniors who never get frozen, the ones I never see sitting across my desk in a panic, are the ones who set up a few layers together. Here are the rest, and none of them are complicated. Layer 2. Set up a durable financial power of attorney in a form your bank will actually accept. And I want you to hear those last words carefully, because they matter. Your bank will accept. Banks reject generic power of attorney forms pulled off the internet all the time. They want their own form, or one that clearly meets their standards. This document names someone you trust to step in and act on your behalf if you ever can't. If you're in the hospital, if a freeze drags on, if you simply can't get to the branch. Done correctly, it means there is always someone with the legal authority to unfreeze your money and pay your bills while you recover. Layer 3. Never keep all your money in one place. Open a second banking relationship, a different bank, a credit union across town. It doesn't have to be big. Even a small account with a couple $1,000s in it becomes a lifeline the moment your main account gets frozen. If everything you have is at one institution, and that institution locks you out for 3 weeks, you have nowhere to turn. If you have a second account somewhere else, a freeze becomes an inconvenience instead of a disaster. Layer 4. Add a payable on death or transfer on death designation to your accounts. This is a simple form the bank has on hand. It names the person who inherits that account the moment you pass, and it moves the money directly to them without it getting trapped in a slow legal process that can take months. For a surviving spouse who needs to eat and pay bills right now, that piece of paper is everything. Layer 5, and this is the one nobody wants to talk about, but I'm going to say it anyway. Keep a modest amount of cash safely at home. I am not telling you to empty your accounts. I am not telling you to distrust your bank. I am telling you that if your account is ever frozen for 3 weeks, you still need to eat. You still need to fill a prescription. You still need to pay the light bill. A reasonable cushion of cash kept somewhere safe in your home, means a freeze becomes a headache instead of an emergency. The people who panic during a freeze are the ones with no other way to reach a single dollar. Don't be one of them. Now let me close Raymond's story because I promised you I would. The $5,000 Raymond tried to withdraw at the start of this video, it was for his own grandson. The boy had called him, thrilled, saying he'd finally found an apartment and needed help with the deposit. Raymond was proud. He wanted to help. But because it was a sudden, large withdrawal, going to a young man of exactly the age these systems are trained to flag as a potential scammer, the bank froze everything while they investigated whether Raymond's real grandson was a con artist. Raymond did nothing wrong. The system did exactly what it was built to do. And here's what breaks my heart about it. If Raymond had simply named his son as a trusted contact, one phone call, one afternoon, one signature, the bank would have called his son. His son would have said, "Yes, Dad's helping my nephew, that's normal for him." And the whole 19-day nightmare would have ended before it ever started. He didn't know the option existed. Now you do. And if your account is already frozen right now, the next 48 hours decide everything. If you're watching this and your account is already frozen, or someone you love just called you in a panic because theirs is, here's exactly what to do. Because the first 2 days decide how long you stay stuck. First, do not argue with the teller or the person on the phone. I know that's the hardest part because you're scared and you're angry, and the person in front of you is the only person you can reach. But they did not place the freeze and they cannot lift it. Fighting with them wastes the one thing you have left, which is time. Instead, ask them one calm question, in these exact words: which department placed this hold, and how do I reach it directly? Write down what they tell you. Second, get the reason and the timeline in writing. You have a right to know why the freeze was placed, how long it's expected to last, and exactly what they need from you to release it. Ask for that in writing, by email or on paper. If they push back, ask again. A freeze without a written reason is a freeze without a deadline. Don't leave the branch without one. Third, give them an easy way to say yes. Offer your trusted contact right there on the spot, even if you never set one up before. Offer a family member who can verify your identity. For a large amount, a short letter from an attorney moves things faster than 3 weeks of phone calls. You are looking for anything that makes it easier for the bank to say, "Okay, we're satisfied," than to keep the hold going. Fourth, if the freeze drags past the date they promised, escalate. Every state has an office that regulates banks. It's usually called the State Banking Commissioner or the Department of Financial Regulation, and there's a federal one called the Consumer Financial Protection Bureau. A complaint filed with either one often gets a response from the bank in days, not weeks. Banks do not enjoy those complaints. They tend to find your money quickly once one lands. So let me bring all of this home because I don't want you to nod along and forget. Here's what to do this week, whether you're currently frozen or not. Call your bank and add a trusted contact. That's the single most important call you'll ever make about your money, and it's free. Then set up a durable financial power of attorney in a form your bank will accept. Open a second small account somewhere else so you're never 100% locked in at one institution. Add payable on death designations. And keep a modest cushion of cash at home for the worst case. If you take a large withdrawal, announce it in person, in advance, and take it in one clean transaction. Never break it up. Touch every account at least once a year so nothing goes dormant. And when your life changes, a new phone, a new grandchild, a new payment app, tell your bank before their computer notices. Now, one important note before I let you go. This is general education, not personal legal or financial advice for your specific situation. The exact rules vary by state, by bank, and sometimes by the size of your account. So confirm your own situation with your bank, your state's banking regulator, or a qualified attorney before you act on anything specific. But the broader lesson, that you can protect yourself in advance, and that the trusted contact is the single most powerful move you can make, is true no matter where you live. The seniors this happens to are not the careless ones. They are not the foolish ones. They are the ones who were never told the rules had changed. Now you know. If this video helped you, do one thing for me in return. Send it to one person you love who is over 65. It costs you nothing, and it might be the reason their next phone call to the bank goes completely differently than Raymond's did. Subscribe so the next one finds you, and I'll see you in the next video.